Welcome back to the channel. We're going over the SP 500, the Nasdaq 100, and how we see the market moving over the next few days, weeks, and is the market going to continue to crash? Everything you need to know while you're trading right now. Let's get to it. Now, the first thing I'm gonna do is go over some shorter term charts right now, just so you can see how the week's moving, how we're trading intraday, things like that. And I'm gonna go broader aspects as well, and some of the key news articles I'm looking at as well, and what to expect for the remainder of the week. So short term, what are we looking at? We got the S&P. And in my opinion, you're trading a little bit in this pennant. You're trying to get that upward pressure. And I do want to highlight, right? So this is where the week starts, just so you know, right about here. That's the start of our day. And you're kind of just trending in this pattern as we speak. I want to mention that you don't have any big announcements coming this week as far as rate hikes, inflation, things like that. None of that's going to be really released this week, so it's going to be pretty chill and mellowed out. Now, going into this, I anticipate a little bit of an upside. I anticipate a little bit of a bouncing on the market, but that doesn't change my thesis to a bull thesis on the economy, which again, broad scale, we'll get into that here in a second. So what are we looking at? Now, you can see you are making higher lows basically since Friday into today, Monday. You're continuing to make those higher lows. You're breaking above those highs you're making there as well, making a little bit of higher highs, trying to get this going as we speak, holding that weekly level as well. Going over to the Nasdaq, this is a little bit more interesting. So as we look at the Nasdaq, you continue to hold this support range right here at around 12.2. If you're following on Twitter, which I recommend that you do, I am posting these as well. And as you can see here, you're just sitting in this range. This is your support. As long as you stay above this, you have to remain onto the side of the bulls. And so you continue to bounce in that range as we look here. You're bouncing, you're bouncing, you're bouncing, but you can't quite get above that 12.5 range, which we obviously keep mentioning. Again, post this on Twitter so everyone had this as well. If you go back, you look at Twitter, what's going on here? Literally 3 hours ago, you get that double top there, flagging, trying to push down, but you can't really get nothing going because you just continue to sit in these key ranges. So as we look and as we watch what's happening, you have to look at these levels specifically here, and you have to point to yourself and say, they are respecting these levels. It is getting respect, and it's looking like it wants to continue that upward movement possibly and start moving back towards 12.5. So that's what I'm looking at right now. As far as day trades, there just hasn't been the opportunities for me, because even with this happening, even with this chop that you're getting on the Nasdaq, look at how Tesla's moving, downside. Look at how Amazon's moving, chop with some downside. So I've taken 1 or 2 trades here, but overall break even on the day, so I'm not too excited. But I am leaning more and more towards the upside as we progress. But if we do start to break these lows, specifically being on the S&P, what I'll say the low you need to be watching for is going to be about right here. So if you break below around 397.5 all the way to about 397 flat roughly, you get below this range, you start moving below, then I flip to a bear here on SPY. The Nasdaq is very close to that range though, because if the Nasdaq gets below this range of 12.2 flat, then you are bearish in my opinion, and you can start moving all the way back down to those previous lows. So as far as the week, this is what you have coming in on news. You don't really have anything big. You have retail sales that will be minor going into tomorrow. Wednesday, pretty chill, nothing happening there. Thursday, jobless claims, that'll be big. And then your Philadelphia, think PMI coming out right there. This is the big one though, jobless claims. If jobless claims start to hurt, that will move the market down, because that's one of the foundational points that the Fed keeps saying, is that jobs are keeping us strong. They're keeping us strong. So if jobs drop whatsoever, again, that will hurt the market. If jobs beat, I don't even think it helps the market that much, but it will keep you on the steady uptrend that you're trying to maintain right now. So again, until Thursday, there's just nothing that big. Tomorrow morning, you have something minor with retail sales. We'll cover that again tomorrow. Earnings, you have some bigger ones coming in here, but you're seeing a lot of consumer staples. You got Walmart, Home Depot, Lowe's. And I don't see this being a huge effect, not a lot of tech, nothing really that major. So I don't see this really playing out or hurting the market or affecting it to the upside, just because it's not big tech. XLP might be on the upside, the consumer staple ETF, but besides that, not too excited. Looking at mortgage rates, I did want to highlight this here. So we mentioned a few days ago, you peaked off at 5.62, and now you're down to about 5.35. What does this mean? Because I have questions in chat about this as well. This means that you're getting just a little bit of a downtrend. You're cooling off on your mortgage rates. You're probably not just going to go parabolic nonstop every single day. I mean, if we go to the max time frame and look, you can see as you start to rise gradually, there's those dip ranges and you come back up. As of right now, you've gone just straight up in a line at your fastest rate basically since 1979. You haven't had this fast of a hike in prices since back here. So yes, you are increasing. I don't see this slowing down, but you're getting a little bit of a pullback here. I think more will come into play as well. And then as we look at those yields, this is going to give us another key answer of what's happening. Because again, people continue to ask me about yields, how I see us moving, etc. And is there more upside on yields? As we look at yields, there's no reason to think that yields are done. They're just stopping. What do we know? Yields typically go up while rates are continuously being hiked. Rates are not being slowed down in the hiking phase. They are going to continue to raise those rates. Now there's the idea that 75 points may be on the board. It may not be. It's big question marks everywhere. If you see anywhere that a Fed member says 75 BPS is likely, it will absolutely tank the market once again in a parabolic fashion towards the downside. So that's what I'm looking at right now is, yes, your 10-year is down a little bit, cooling off, but as we look at the 30, it's still sitting up there at about the same range. And then once we come back into that comparison to show you the full inversion and show you how the actual market's moving, yes, you're still up in that range, getting back kind of towards those lows that you had back in April, but you're still sitting in a very high range of 0.937%. And once you get another hike coming out here, more inflation news, which I think is what the market's waiting on, that's when you'll start to see more of an upward push on the inversion and more concerns about the recession specifically in the next few days as well. The next thing I want to talk about is specifically on Bookmap, showing you that hidden order book and exactly what big money is doing. And I want to take the icebergs off because you're not really seeing any hidden orders coming onto the block right now. But what I will say is the volume on ES, which is the S&P futures, you are seeing continuous volume and you're in a steady uptrend, kind of chopping out right now with that downtrend we were just facing. But on the whole day, you are steadily going up, which again leads me to believe you're going to get somewhat of a little bit of a bounce back towards the upside. When we come back to the chart, where exactly does that show us on the SPY? And that's about the 404, 405 range. That's what I'd be looking for. You're trying to break out of it right now. That's what I'm telling my traders to be looking for in the next few hours as well. 404, 405. If you get above that range, that's when we get into bull territory and really telling you where we're going and possibly getting into some longer calls on the broad stock market. So looking at that, going to the Nasdaq, this is the easiest and biggest thing you need to watch for. As long as Nasdaq stays above 12.2, you're bullish. If you get above 12.5, 12.6, you are easily running back to 13,000 almost immediately, in a hurry, very strong and quick. I'll have updates on Twitter, so make sure you're subscribed to Twitter. So I'll have those charts coming out for you periodically throughout the day as well. But that's where I have the video up. I'm looking at that right now. If you're looking right now, you got to trade towards that uptrend, just basically on these option plays. That's where I'm targeting 404, 405 on SPY. This is my Nasdaq chart. More videos will be coming out. Make sure you like, make sure you subscribe. Every day we're giving you the best content so you know how you're trading every single day. Have a good one, trade.